The Chinese yuan, CNY, receives a boost from the PBoC. Alright guys, what happened then? So last night, the PBoC, the People's Bank of China, cut one of their key lending interest rates, right? So the PBoC, they have various ways of interacting with financial markets to control interest rates. One of their important ways of interacting with markets is through something called the medium-term lending facility, right? So what they do is they take an amount of money, in this instance last night it was 200 billion yuan, and they lend it to banks over the medium term, which is anything between sort of 6 months to 1 year. So last night they lent 200 billion yuan to various Chinese financial institutions for 1 year. But the key thing here isn't just how much they lent. The key thing is the fact that they cut the interest rate, right? So they cut the interest rate from 3.25% for that 1 year loan to 3.15%. Now, when the PBoC is cutting interest rates, it's just like any other central bank, right? Like the Fed or the BOE or the ECB. By bringing interest rates down, they're supporting the economy by encouraging spending, by pushing financial markets higher to help confidence in the economy. So what did we see as like a market reaction from this PBoC decision to cut rates yesterday? Well, broadly speaking, we've seen risk appetite supported by this, okay? So AUD, obviously AUD, we always talk about it, it's a good proxy for China related sentiment because China is one of Australia's most important trading partners, right? AUD was buoyed, other risk sensitive currencies like CAD buoyed, global stock indices buoyed, crude buoyed. We also saw a little bit of weakness in havens, right? So JPY, little bit under pressure, gold, little bit under pressure, okay? So how does this easing from the PBoC fit into the bigger picture then? Well, obviously, as we all know, the Chinese economy right now is getting smashed by coronavirus, right? Production has pretty much come to a halt. People are allegedly back at work, but from the reports I've been seeing, most factories can't actually restart production because only half of the employees have come back, right? So the Chinese economy is basically ground to a halt. People are too scared to leave, and this is going to be a massive economic hit for China. So the Chinese authorities, they've got to step in to support the economy, right? So the government's going to do it through fiscal stimulus, and you're seeing it from the PBoC in monetary stimulus, pushing those interest rates lower. Looking ahead then, what are we expecting? What more easing are we expecting from the PBoC? Well, in 1 month, we have something called the loan prime rate. The loan prime rate is very similar to like the Fed's interest rate, right? It's the rate at which banks can lend. So in this particular example for China, the loan prime rate is the rate at which Chinese banks can lend to their prime or their favorite customers, basically their customers with the best record of paying back debt. And that decision takes place in March, and we're expecting a similar cut. According to a survey that Bloomberg took of all these analysts agree we're expecting about a 0.1% cut in that rate as well. So that is pretty much it from me for now, and I will see you in the next one.